If you enjoy my mortgage payoff updates, you're in luck because today is a big one. It's a very exciting milestone. But first, if you're new here, my name is Mary and this is Penny's Not Perfection, where we talk about all things personal finance like saving and debt payoff without trying to be perfect, because we all make financial mistakes, but the only thing that matters is being consistent and working toward a better financial life in general. So today we're going to look at our mortgage payoff journey, because I do this every 6 months or every quarter, just a couple times a year, to show the progress of paying off a mortgage. This is helpful for some people that haven't had a mortgage before or don't know how it works. And I've shared everything since buying this home all the way up to now and this new milestone. So the last mortgage payoff update was back in March. And on that March update, we had a balance of $104,990.76. That was our March 2024 update. And I actually pulled out our original amortization schedule. I used to share this on the channel when I first started talking about my mortgage and we first got it. So we got our loan on this home back in July of 2016, and our first payment was on September 2016. So today is September 2024. So we've been paying on this home for 8 years. And our loan balance, the loan amount to start, was $153,596. So we started at $154,000 roughly. So today we're going to be looking at the new balance, and you already know we paid off $50,000 basically in 8 years on this home. So let's look at where we are now. Obviously, we've made several payments since our last update where we were at $104,000 in March. So our last payment that was made was a payment of $1,430.16. So looking back at my payment amount back in 2016, our payment amount total was $800. And part of me wishes I still was paying $800, but we've made a lot of changes since then. We did refinance our loan. So we refinanced to a 15-year back in 2020, and we got a lower interest rate. We have a 2.75% interest rate. So we lowered how much we're paying on interest, and we sped up the mortgage payoff process in that move. So that was really nice, even though we are paying more because we went up for that reason. We are also paying more now because our home insurance has increased dramatically over those 8 years. It costs a lot more to pay our yearly home insurance amount. And then it also has increased dramatically what we pay in taxes. And actually we have another planned tax increase where I live. That number will probably keep going up, both of those. So that is partially why our payment is a lot higher as well. We pay a lot more for those two things, our property taxes and our home insurance. So with those two continually rising, our mortgage payment continually rises as well. So what you pay when you first start a mortgage is not always what you're paying a couple of years down the road. And that is important to remember. If you are a first-time home buyer or you don't own a home yet, the amount that you pay monthly does usually increase because most mortgages have an escrow account where you pay the mortgage to the mortgage company. They put the money aside for the insurance payment and the taxes, and then they pay it for you. But every time that increases, what you're paying on your monthly mortgage payment goes up. Sometimes you can separate those, but also some mortgages don't allow you to. So it really depends on the type of mortgage you're getting. But we're getting in the weeds here. It doesn't matter. I used to pay $800 a month for this house when we first bought it, and now we pay $1,430. So we did pay our $1,430.16, our last payment, and of that amount, to principal was $733.14. That means $733 was paid directly to the loan to reduce the balance. So that's exciting because that is half of what we're paying. So we're paying $733 every time it drops by that much, the loan balance. So that's great. I'm actually really happy with that and thrilled that we're paying almost as much in principal reduction every single month as our original full payment. Then in this last payment, we did pay interest. So our interest amount from that payment was $230.50, went toward paying interest. And then we did have the remainder go into our escrow account to pay those taxes and insurance payments. So that was $466.52 that went toward our escrow. So with all of that said, after this last payment, we are at a new milestone of how much we owe on our mortgage, and the new balance is $99,848. That's so crazy. So we owe less than $100,000 on this house, and honestly, it does feel really good to owe less than $100,000 in debt on this home and just have a much lower debt balance than we previously did. So that feels really nice. So I did want to mention that because I pulled out the old amortization schedule, I can see where we would be at this amount. So originally, if we were at this, after this payment, we would have hit it in January of 2031. So we're, like roughly like 7 years ahead of schedule with our mortgage payoff because we have made a couple different changes. And ultimately, we're going to finish a lot faster than that original 30-year period while we are paying off the mortgage at this rate. So what's next for us, and do we plan to pay off the mortgage faster? I know a lot of you are going to ask that, and the answer is no. We are not currently paying anything really extra. Every so often I'll put like $1 or $2 a month toward it, but nothing significant. We are not prioritizing that financially because it just doesn't make sense with such a low rate on our mortgage. We can earn way more just putting money in a high yield savings account or investing it. So there's no real reason for us to pay off our mortgage, especially when my income has stabilized a bit and I feel a lot more comfortable with my business and how much money I'm bringing in every month. So I don't feel the need to aggressively pay off our mortgage. But I will say, part of me that loves to be debt-free and loves to pay off debt really, really wants to attack this and pay it off and just be done with it. There is a part of me that sees less than $100,000 and is like, oh, we could do that in a couple of years. We could just knock that out. That could be done. But we're not going to because mathematically it doesn't make sense, and I do want to put us in the best position possible. So we will be focusing more on saving and investing than debt payoff. We do also want to purchase a new home, so we are saving up a down payment for that, and we will either sell this house or use a HELOC or just have it as a rental. We aren't totally sure on that, but we do plan to try to maximize what we have here to best set us up for the life that we want next when we do need to move from this smaller house to a larger house to fit our family a little bit better. But I'll be honest, for now, I am really, really happy with that $1,400 mortgage payment. Like, it's so affordable. It is a really awesome benefit for our family because housing prices have gone up so much in the last few years and rent prices have as well. So for us to have a different space, we would be paying a lot more than we currently are. So right now, while our kids are still small and our life is really nice right now where we are and what we're doing, I love having such a small housing expense in our monthly budget. So relatively speaking, to move to another area or get more space, we would be paying way more in rent. So I'm very happy with our $1,430 per month right now. But I'm also really happy that we have reduced our mortgage so much and we're now under $100,000 owed on this home. That also means that our net worth has grown dramatically because of our home equity. We haven't really done anything crazy. We've just let our consistent actions over time make this happen. And that's really what personal finance is all about. That's really what we talk about here a lot on Pennies Not Perfection. Being consistent without being perfect is something that can really take you from a dark place financially to a really good place. So if that sounds good to you, I hope you stick around and definitely check out this next video.